March 27, 1980. Around 10 in the morning, panic broke out on Wall Street. In a single day, two of the richest men in America lost more than $1 billion. That's roughly $1 million every minute. Their names were Nelson Bunker Hunt and William Herbert Hunt. Just a few years earlier, they had come within reach of controlling the world's silver market. But something else matters even more. They made the financial system shudder and scramble to defend itself. How did two Texas billionaires come so close to beating Wall Street? Why, at the decisive moment, did the rules of the game suddenly change? And why, decades later, has this story become relevant all over again? To understand the Hunt brothers' true motives, you first have to understand their father. Haroldson Lafayette Hunt started out as a poor farmer. As the legend goes, he won his first oil well in a game of poker, and by 1948, Fortune magazine was already calling him one of the richest men in America. But the most important inheritance he left his sons wasn't money. It was a worldview. He didn't trust banks, he didn't trust the government, and he considered paper money a promise that one day might be broken. The older brother Bunker didn't look like a billionaire at all. He wore plain suits, drove his own car, and preferred to live without any show of luxury. His younger brother Herbert was the complete opposite, a quiet, calculating man who handled the financial side of the family empire. They didn't need to get any richer, but very soon, the brothers would face a question that would change their whole lives. What do you do if the government can change the rules of the game at any moment? Over the course of a few years, the Hunt brothers lived through two events that changed their relationship with money forever. The first blow came from Libya. In 1961, Bunker Hunt did something almost impossible. He secured the rights to one of the largest oil fields in the world, in the North African country of Libya. For a time, by some estimates, that discovery made him the richest private individual on the planet. But in 1969, Colonel Muammar Gaddafi came to power in Libya. For a few years, everything stayed the same. And then, on June 11, 1973, the Libyan government nationalized Bunker Hunt's stake. Gaddafi openly called it a slap in the face to America. With a single stroke of the pen, the billionaire lost a huge part of his fortune. But there was a second blow, and it was no less painful. On August 15, 1971, President Richard Nixon announced that the dollar could no longer be exchanged for gold. For most Americans, almost nothing changed. But the Hunt brothers immediately understood what the decision meant. From that day on, the dollar no longer rested on gold, only on trust in the government. It was a strange situation. One government had just shown that it could take away your property, the other, that it could change the rules of money at any moment. After that, the brothers made a decision. They needed an asset that neither Gaddafi nor Nixon could take away. Something real, physical, something you could hold in your hands, keep in your own safe, and, if need be, move to another country. At first, the brothers looked at gold, but in the early 1970s, private individuals in the US still weren't allowed to freely own large stockpiles of gold. The laws passed back under Roosevelt stood in the way. That was when they turned their attention to silver. Silver was the gold of ordinary people. Within reach of everyday families, it was kept not in bank vaults, but at home, in rings, dinnerware, and coins. But silver had one more important property. Its global market was dozens of times smaller than the market for gold, which meant that a wealthy enough player could, in theory, buy up a significant share of all the available metal and start dictating the price. And that is exactly what the Hunt brothers decided to test. They began methodically buying up silver. But unlike most speculators, the brothers had no intention of trading paper contracts. When a contract neared its expiration, they said, "Deliver the metal, the real thing, physical." Trucks loaded with bars left the exchange warehouses and headed for their private safes. The brothers moved most of their silver to Switzerland and London, far from American regulators. After Libya, they no longer trusted the government to safeguard their wealth. At that point, the brothers still didn't know that an ordinary purchase of silver would very soon turn into the biggest showdown with America's financial system. The buying began in late 1973, when silver cost less than $3 an ounce. The first big order, nearly 20 million ounces. Within a few months, the brothers held around 55 million ounces, almost 8% of the world's annual output. The result wasn't long in coming. The price of silver more than doubled to nearly $7 an ounce, and that was when the system got worried for the first time. The government of Mexico stepped in, one of the largest silver producers. It dumped enormous state reserves of the metal onto the market. The price crashed back almost immediately to about $4. It was an unmistakable signal. Enough. Most investors would have stopped there, locked in their profit, and walked away. But the Hunt brothers saw something completely different. If silver had gotten cheap again, that meant they could buy even more, and they doubled down. Soon they gained powerful allies. According to investigators, the Hunts were joined by members of the Saudi royal family and several large brokerage houses. This was no longer the gamble of two eccentric Texans. It was a private financial alliance that had thrown down a challenge to Wall Street. By the end of 1979, the Hunts and their allies controlled around 200 million ounces of silver, nearly a third of all the world's privately held stockpiles. And the market reacted exactly as the brothers had counted on. At the start of 1979, an ounce of silver cost about $6. By the fall, already more than $15. And on January 18, 1980, the price reached nearly $50 an ounce. In less than a year, silver had risen more than 8 times over. America was gripped by a genuine silver fever. People carried anything that contained the precious metal to the buyers: grandmother's teaspoons, wedding rings, family dinnerware that was 100 years old, and more. In jewelry workshops, the melting furnaces ran without stopping. Family heirlooms turned into faceless bars in a matter of minutes. But silver wasn't getting more expensive only for collectors. It was a vital industrial metal. One of the first to feel it was the British company Ilford, the largest maker of photographic film. Silver became so expensive that production turned unprofitable and layoffs began. It was almost absurd. Workers in England were losing their jobs because 2 Texas billionaires were buying up metal thousands of miles away. Even the famous jewelry house Tiffany took out a full page in the New York Times to publicly condemn the actions of the Hunt brothers. To business, they had become a threat. But to many ordinary Americans, the opposite: heroes. From the outside, it looked simple. 2 Texans had finally challenged Wall Street, the banks, and a financial system that had been debasing money for years through inflation. And for a while, it seemed they really were winning. But Wall Street could no longer ignore it. The financiers saw what the public didn't. A great many banks had sold silver short. They'd promised to deliver metal they didn't have. And to make good on those promises, they would have to either buy silver from the Hunts at $50 or admit default. It turned out the brothers had cornered not just the metal market, they had cornered the entire financial elite. If the Hunts kept demanding physical silver, the banks would have to admit a terrible truth: there physically wasn't enough metal in the system. So behind the closed doors of the COMEX exchange, a completely different story was unfolding. The exchange's leadership understood. The problem was no longer the high price of silver. What was at stake was the trading system itself. To resolve the crisis, COMEX created a special silver committee. It was headed by Andrew Brimmer, a former member of the Board of Governors of the Federal Reserve, one of the most respected economists in the country. Together with the heads of the largest brokerage houses and banks, Brimmer met almost every week for emergency sessions. Over the course of a few months, there were more than 20 such meetings. The picture they saw looked frightening. For years, banks and brokers had been selling silver futures contracts, counting on buying the metal back cheaper later. But now the price was climbing fast, and physical silver was increasingly disappearing into the Hunt brothers' vaults. Many market participants faced bankruptcy. The COMEX board faced a hard choice: leave the market to live by its own rules and risk bringing the whole system down, or step in and change those rules. After several months of discussion, Brimmer and the COMEX board made their decision. On January 7, 1980, the COMEX exchange effectively began to change the rules of the game. First, it sharply restricted buying silver on credit, introducing the so-called Silver Rule 7. And soon, trading was switched to a liquidation-only mode. Buying new contracts was no longer allowed. You could only sell. Imagine a boxing match where one of the fighters is clearly winning, and suddenly the referee announces, "From this moment on, throwing punches is forbidden. You can only defend." That is exactly the situation the Hunt brothers found themselves in. Why did the exchange take this step? There's still no clear answer. Some believe COMEX prevented a market collapse and a chain of bankruptcies. Others point out that among the exchange's leaders were representatives of the very banks that were themselves facing enormous losses. By that version, it wasn't the market they were saving, it was the market's biggest players. Whichever version you hold to, one fact remains beyond dispute. At the decisive moment, the rules were changed, and that completely changed the course of the game itself. March 27, 1980, the day that went down in history as Silver Thursday. By this point, the price of silver had already been falling for several weeks. There were almost no buyers left. The market had only sellers. And then one of the largest brokerage firms, Botch, demanded that the Hunt brothers urgently put up $100 million in additional collateral. But they no longer had that kind of money. By that moment, the Hunts controlled nearly $6.6 billion worth of silver. Yet they had put in only about $1 billion of their own money. Everything else had been bought with money borrowed from banks and brokers. When the market realized the brothers wouldn't be able to meet the demands, panic broke out. In a single day, silver crashed from $21.62 to $10.80 an ounce, almost by half. The Hunt brothers were losing money at an incredible speed, roughly $1 million a minute. But the most dangerous part was still ahead. The firm Botch itself was on the brink of bankruptcy, and behind it, others could fall too. Later, the head of the financial regulator would say that the crisis around the Hunt brothers had nearly punched a hole through the entire financial system of the United States. And then came the most unexpected twist of all. To stop the chain reaction, a consortium of banks, with the approval of the Federal Reserve, issued the brothers an emergency loan of $1.1 billion. The result was a paradox. The system the Hunts had fought for years was now saving them from bankruptcy, not because it wanted to help, but because their collapse could drag a significant part of Wall Street down with it. The loan saved the financial system, but it no longer saved the Hunt brothers. The next 8 years were spent in court. In August 1988, the Hunts were found guilty of attempting to manipulate the silver market. They were fined, ordered to pay multi-million-dollar damages, and banned for life from trading on commodity exchanges. That same year, Bunker Hunt declared personal bankruptcy. The family oil companies had to be sold off. The famous racehorses went under the hammer. Even the unique collection of ancient coins was put up for auction. In just a few years, an empire the Hunt family had built over decades came crashing down. It seemed the story was over, the brothers had lost. But the question they had put to the financial system hadn't gone anywhere. The Hunt brothers had tried to obtain not paper promises, but real metal. And it turned out there can be far more promises than there is silver. Decades later, that question found itself at the center of attention again. In early 2026, silver set a new all-time high, and then, in a single day, collapsed sharply after margin requirements were raised. Almost the same scenario the world had already seen in 1980. And this isn't only about silver. In 2021, during the GameStop saga, millions of retail investors also tried to corner the big players. And when the situation got dangerous, buying the shares was suddenly banned. Selling? Go right ahead. Coincidence? Everyone can decide for themselves. But the story of the Hunt brothers is a reminder of one simple fact. The financial system operates by its own rules. And if someone gets too close to its limits, the rules sometimes change right in the middle of the game. So who were the Hunt brothers really? Greedy manipulators? or people who exposed the weak points of the system? Write in the comments what you think.